Today, I'm managing my monthly ongoing trade on SCHD, which is currently trading at $28.67 a share. I have a cash secured put with a strike price of $28.67 expiring today. It is right at the money and at risk of assignment. Last month, when I set it up, I told you I was hoping for the price to pull back a bit so I would be assigned to buy 100 shares. Well, today, you'll see me go against my own advice and try to roll this put out to December. But the market refuses to cooperate with me, and I can never get the order to fill. So I decided to leave the decision in the hands of the market gods, and I'll know by the end of the day whether I own 100 more shares of SCHD. On my spreadsheet, I show you the two possible outcomes of the trade, and I'll make a note in the comments this weekend to let you know which way it turns out. I'm thinking the failure for the trade to roll may be related to the odd strike price, which is a remnant of the 3-for-1 stock split last month. And I hope this ETF will be easier to trade next month. But as always, since I set the position up in a way that leaves me happy with either outcome, assignment or not, I'm still totally unperturbed and I will happily accept additional dividends in lieu of option premium for the roll. I'm Patricia Saylor, Managing Partner of Saylor Financial Fundamentals. I'll see you next month for an SCHD trade update or next week when I update QQQ. And as always, remember to guard your treasure and don't trade on margin. Right now, SCHD is trading at $28.66 or 67 cents a share, and I have a cash secured put that is expiring today with a strike price of $28.67. Last month, when I set up this option contract, I noted that I was hoping the share price would pull back and I would be assigned to buy the shares. I don't know whether that would happen at the end of the day if I chose the do nothing route. So I've decided that I'm going to roll this contract out 1 month to, excuse me, to December and hope that I can be assigned then. And I have a covered call contract that expires in January with a $30 strike price that I'm just going to be leaving alone today. Let's go back really briefly, though, and look at where this position stands. You might recall that 1 month ago there was a stock split, a 3-for-1 stock split. So my share count was multiplied by 3, and all of my option contracts were divided by 3. And I went ahead and let go of 300 shares at that point to lock in some gains and reduce the size of this position. So right now my average out of pocket per share is 23.34, 23.35. I think I'm going to go ahead and buy a few shares today to hold for the upcoming dividend in December. So let's do a little handling. I'm going to roll out the cash secured put, bring some income into the account, and sell another. And buy some number of shares, and I'll decide how much that is when we get there. The strike $28.67 is kind of an unusual strike price, and it's a remnant from the stock split. So this strike price is not available for December. I need to choose either a $28 strike price or a $29 strike price. A $29 strike price would bring in probably $50, and I'm leaning toward that one because it makes it more likely that I'll be assigned in December and own these shares before the next ex-dividend date. So let's see, I'm going to look and see what I could get for 28. Yeah, the premium is just not worth rolling it out with a $28 strike price. So I'm going to bump it up to 29. I do not usually sell in the money puts, but um, even if I'm assigned at 29, this extra $50 or so will offset the price of these shares. So I feel like um, it's a good choice. Okay, let's take a look at this. Um, this may be a problem with the fact that I am doing this in a paper trading account because I haven't had these problems um, in my real money account. But for reasons I don't understand, I am not able to close out this contract for today, this 2867 contract. So, since it is a contract that I would be happy to have assigned, I'm going to leave it alone and choose the do nothing route and just wait and see what happens at the close of the market today. I may be assigned to buy 100 shares and pay $2,867 for them, or the position may expire worthless, and I'll have that cash freed up again to set up another contract later. So I'm going to go ahead while the price is down a bit and pick up 50 more shares to keep in this account. And just for clarification, I'm going to show you the two possible outcomes at the end of the day today. Okay, so if the share price is less than 28.67 at the end of the day, I will be assigned to buy 100 shares and I will pay $2,867 for them. And if the share price is above $28.67, then the contract will expire worthless and no money will change hands, no shares will change hands, and the contract will just expire. So if I'm assigned to buy 100 shares, my total expense will be, let's go back to where we opened the position. So I would be out of pocket $8,503.97. And I would have, let's see, I just bought 50 shares. So right now I have 230 shares. So I would have 330 shares. With an average investment per share of $25.76. And if it expires worthless, then I'll be exactly where I am right now. With an average investment per share of $24.50. So I'll put a note in the video comments and tell you what the outcome of this is at the end of the day. And then I'll see you again on December, I think the next expiration is December 20th, and we'll continue to build and adjust this position.